Welcome to Capitol Hill. Well, day 2 of the carbon tax hard sell has become a numbers game. $4.7 billion of investment in an Australian coal company, a primary vote for Labor of just 27%, and a discussion about modelling on the carbon tax at both $20 and $23 a tonne. To discuss all the numbers and hard sell so far, I've been joined in Canberra by Labor MP Andrew Leigh and in Adelaide by Liberal MP Andrew Southcott. Welcome to you both.
Pleasure.
Thank you, Lyndall.
If we can start on the news poll, we'll hear from Tony Abbott, who yesterday suggested that Labor MPs might cross the floor. Today he was suggesting Labor MPs might take a different tack. This is what he had to say.
They may not cross the floor, but they may well remove this Prime Minister. Look at how the mining tax ended Kevin Rudd's Prime Ministership. No one should assume that the carbon tax won't end Julia Gillard's Prime Ministership.
Andrew Leigh, a poll figure of a primary vote of 27% is normally way below where MPs get worried about their own futures. Why isn't caucus looking at moving against Julia Gillard?
Lyndall, I worked on a range of topics while I was an economics professor at the ANU. But one of the things I actually did do was to look at the predictive power of polls a couple of years out from the election. And it turns out they have absolutely no predictive power. I think anyone who is looking at polls as a predictor of who's going to win the next election is just wasting their time. And frankly, wasting their time, we should be talking about ideas. And
this poll doesn't tell you anything at all?
This poll has no predictive power on the next election.
Does it hold a message?
Look, I think you'd be worried if we did the opposite. Imagine a government that was only focused on the polls, only focused on winning the headline on the next day. We would then be governing the way Tony Abbott is leading the opposition. Instead, we're focusing on long-run reforms, on actually create reforms that'll make a difference for Australia, for our kids. I'm enormously proud to be arguing for big, game-changing reforms like this. That's what government is about.
Andrew Southcott, is Andrew Leigh right that 2 years out from an election this poll doesn't tell us very much?
Well, it's wrong to say that the Labor Party aren't fixated on polls. I mean, 12 months ago, they were very fixated on polls, and that was one of the big reasons they gave for getting rid of Kevin Rudd. And I think what the polls do reflect is that Labor Party aren't listening to the community, because as I go around the community, what they're saying is we do not want a carbon tax. Small business are saying how tough the current climate is for them, and families are really concerned about the increases in the cost of living. And so what they've done is introduced a carbon tax, which will see big rises in the cost of living, and has nothing there for small business. So
but
as a result, Labor.
But 2 years out from an election, with a carbon tax to be introduced in the middle of next year, people will have, as Julia Gillard says, lived the carbon tax for at least a year before the next election. Does a poll now give us any messages that will last until the next election?
Look, we're not really fixated on the polls. We're fixated on what's going to be good for this country, and we think that the carbon tax will not be good for our competitive position, and that's why we'll be opposing it.
Today we had news that a mining giant Peabody is making a $4.7 billion takeover move for MacArthur Coal. Andrew Southcott, doesn't that show that people still have confidence in the coal industry even with the carbon tax?
No, it does not. What it shows is the Australian Coal Association have already rejected this idea that this shows that the coal industry says something about its health or its future. The government really are clutching at straws by grabbing onto this. The Australian Coal Association believes that there will be 4,700 jobs lost in the coal industry, and I just note that this is the same bid that was made last year. Since then, the price of coal has risen, and the bid is actually lower now than it was last year.
Andrew Leigh, do you have to actually look at all the factors, not just the carbon tax, as a reason Peabody might be making this sort of takeover bid at this time, and they might also look at the political climate and think that your government won't last and Tony Abbott's promising to rescind the tax.
No, I don't think that's right at all, Lyndall. I think what this is clearly showing is that by demonstrating their willingness to make a $5 billion bid, the company are showing that there are $5 billion reasons why Tony Abbott is running a scare campaign. The ASX very clearly last week reminded companies of their obligation to be truthful with market disclosures. And what you're seeing here is a company which is backing the government when it clearly says that there are not going to be substantial job losses. And that's the thing about using a market-based mechanism, starting with a modest price. We allow time for the change to take place, and we recognise that we'll get a 5% cut in emissions by 2020, but then going for an 80% cut in emissions by 2050. And the market-based mechanism allows the change to occur in the most cost-effective way. We get that economic transformation not by shutting down coal-fired power stations that have just been built, but by allowing organisations to phase out assets as they reach the end of their useful life.
I want to ask you both about the question of jobs. First, Andrew Southcott, if jobs aren't lost, even in the year after this tax is introduced, does that prove that you have been wrong to warn that they will be?
Well, we think jobs will be lost. I mean, the example that we've been talking about, the coal industry, the Coal Association have said 4,700 jobs will be lost. They've said that high-cost coal mines will close, and it's wrong to draw anything from the Peabody takeover in that merger and acquisition activity doesn't necessarily show what the health or future of the sector will be. Now, on the issue of jobs, we're basing it on out-of-date modelling. The government have produced modelling based on a carbon price of $20 per tonne, and we know now that the carbon price is $23 per tonne. So we actually need to see updated modelling of what the employment impact will be of the carbon price.
We'll go to the modelling in a minute, but first, Andrew Lee, the government can't afford really to have any jobs lost in the coal industry at all, even if they're not directly attributed to the carbon tax.
Lyndall, the transition here is going to be smooth and the economy is going to continue to grow. We'll see substantial job growth in all of our modelling going out to 2020, 2050, and that's because we're dealing with dangerous climate change in the most efficient way, by putting a price on carbon. Conversely, the Coalition's approach, which is to impose heavy taxes on Australian households and use that to subsidise polluters, is much more economically inefficient and would cause substantial job losses. That's why they still can't find a single economist to back their plan.
We'll go to the issue of modelling now and hear what Julia Gillard had to say about the different prices that the carbon tax was modelled at.
The difference between modelling on the 20 and the 23 will still be growing, will still be creating jobs, Neil.
So, but not as many as predicted in this?
Well, 1.6 million jobs is the prediction.
And what should it be, do you think?
Well, I think the variation would be very modest
still
indeed.
Jobs, real jobs.
Yeah, but we're talking about 1.6 million jobs,
And what about
Neil.
the growth? How wrong is that prediction?
Well, once again, I think it would be a very modest difference.
What?
Now, the pricing was, the likely rise in prices was based on $23 a tonne, but the jobs growth and the impact on the economy was based on $20 a tonne. Andrew Lee, the government said it's rerunning that modelling. Will that be released publicly?
Lyndall, I'm sure that all that information is going to be released publicly. And what we're doing here is we're doing long-range macroeconomic modelling. So when we say very clearly that the household assistance will cover 9 out of 10 households, when we say that the price impact will be less than 1%. So if you've got a product that costs $30, the price impact will be less than 30 cents. Then all of that is based on the $23 a tonne figure. When we're looking at some of these long-run models, yes, we ran the models earlier this year off $20. It will make a trivial difference when we come back to do that.
Why couldn't it have been rerun when you knew that the carbon price was $23?
Well, these models are much more complicated and they're looking much further out. And it's important to remember that we've just got that fixed price period for the first 3 years. After that, we move into an emissions trading regime and the starting price doesn't matter for that. And so, if you're thinking of a model that runs over the next 40 years, then the price for the first 3 years is really not going to matter much for that. The price for the last 37 years will be the emissions trading regime, and everything the model produces is basically going to be spot on for that. So I think this has been blown way out of proportion.
Andrew Southcott, isn't the most important part of the modelling the price impacts on consumers and making sure the compensation is calibrated to that?
Well, we need to know what the impact is on the economy, what the impact is on jobs overall, and that's why the modelling needs to be updated. But there's a lot of other things that haven't been taken into account here. The fuel treatment for heavy on-road vehicles, the international permits, the $10 billion Gillard Bank for renewable energy, the payments to close down electricity plants, all of closed down power plants, all of these things have not been taken into account in the Treasury's analysis, and so we do need to have updated modelling. What we've got is out of date.
Andrew Lee, there are some things that the government announced that were outside the Multi-Party Climate Change Committee talks that are funded through the budget, and indeed part of it, Julia Gillard says, funded through the contingency reserve. Doesn't that means that this package is not revenue neutral? Doesn't that raise a question about the government's economic competence if it's going to go deeper into deficit to fund some of this?
Lyndall, the differences here are again quite modest. Overall, this is a package which is going to deliver for households and deliver for the economy. 9 out of 10 households will get assistance, and that assistance is going to be generous. If you're a pensioner, you will see your pension go up 1.7% to cover merely a 0.7% price rise. These price rises are less than a third of what we saw under the GST. So, I understand Tony Abbott is out there running his scare campaign as he likes to do, but he strikes me like one of these cult leaders who said the world was going to end on the 21st of May. You gather all your acolytes together and everyone gets very excited, but come the 22nd of May, when the world hasn't ended, you're in real trouble. That's going to be Tony Abbott in the middle of next year.
Andrew Southcott, don't you have to look at the total budget impact over the forward estimates? And Julia Gillard said today, when you get to the last year of the forward estimates, the impact will be broadly revenue neutral. Don't you have to look at what the impact will be over the 4 years?
Well, you only need to look at Labor's track record of what they've been saying. 4 years out, they've been way off. What we do need to know is what the exact impact is going to be on the budget. Joe Hockey asked a very specific question of Wayne Swan last week about whether they were using the contingency reserve. The Treasurer said no. Now we find out they are planning to use the contingency reserve, and what we find is they're introducing a tax, but at the same time they are creating a much bigger budget deficit to fund the whole carbon tax package.
Andrew Lee, Joe Hockey also raised today the question of the flood tax. You put on a flood levy so as not to have because of the impact on the budget of the floods. If you couldn't fund all of the reconstruction from the floods out of the deficit, why have you funded some of this package out of the deficit?
Well, Lyndall, the reason we put on the flood levy was because that was an unexpected set of natural disasters. Australians would have looked at their television screens over summer and been as shocked as we all were when we saw the bushfires and the floods that hit. And the budgetary cost of that reconstruction was pretty substantial. But I don't see people jumping up and down about that, just as I don't see the mining industry jumping up and down about the minerals resource rent tax. I mean, we've had these sort of scare campaign after scare campaign run by Mr Abbott on the flood levy, on the minerals resource tax, and then I think people are moving on and realising that industry is investing and we're moving into a strong growth phase.
And that's where we'll have to leave it today. Andrew Southcott and Andrew Lee, thank you very much for your time.
Thanks, Lyndall.
Thank you, Lyndall. Thank you, Andrew.
And thanks for joining Capitol Hill today.